As the MPC considered the developments and since the last meeting, one of the things that they confirmed, assessed, was that inflation continues to decline, and it's, as you know, below the midpoint of the government target. It's about 3.7. We are waiting for numbers for this month, but we expect that it will remain around there, meaning around the midpoint of the government target. And it's been driven largely by falling food prices. And as we know, we have had an increase in supply in that area, agricultural products. But also there is the increase in the price of, international price of fuel. So that is pushing against the declines that we just now mentioned. But either way, it offsets, as was mentioned in the press release. This offsets the upward pressure from energy and energy costs. That's one thing that I think came out very clearly. Looking ahead, also looking at the market perception, the inflation seems to be well anchored. So that is something that I think all of us have a good handle on. At the same time, growth in 2017, the numbers were confirmed at 4.9, and that shows that that confirmed our expectation last time that the economy was very resilient in 2017, despite the various shocks that we have talked about over the last 3 meetings, actually 4 meetings. That is the drought, the problems with regard to the long electioneering period, and all those other considerations. It's interesting, as we have said before, that it's led by the services sector. Services sectors are driving the economy. So private consumption remains dominant in this regard. We also had some indications of Q1 of 2018. So not so much early numbers, but let's say leading indicators. So the leading indicators for 2018 show a very favorable performance in Q1. As a matter of fact, the estimated growth rate in Q1 was something in the order of 5.8% in Q1, and which is obviously a world of a difference from what it was in Q1 of 2017. So this, I think, was, in summary, what was seen by the MPC in terms of the background where the economy really was. A few other points to mention: the external sector, the current account. In 2017, the number is calculated at 6.7. I'll come back to this in a minute. And we expect this to fall to 5.4% of GDP. I think there are a few trends that are important there. Exports, particularly tea, appears to be quite strong, both in terms of the volume and price. It's also interesting that the markets are now much more diversified. I'm talking now tea. We've expanded into Asian markets, rather than just focusing on one country or a few countries. Sri Lanka, excuse me. So we've diversified our partners in terms of tea exports, and that also obviously works in our favor, not only in terms of pricing, better pricing, but also in terms of stability of the destination. The other things also that we could talk about, but horticulture also have been rising. Horticultural exports, those also seem to be doing very well. And of course, there is the perennial remittances by our diaspora. That also is an important element to look at. I think from month to month, it's going from record to record. So 200 million plus US dollars in monthly remittances, which obviously works well for us. I don't want to say too much beyond that in terms of the external sector, but I wanted to flag a specific problem, a specific issue regarding the numbers for 2017. You know, we received all of us received the early data, meaning the first print data for 2017 in the economic survey that was issued, I guess, at the end of April. And looking at the numbers, there is an interesting, curious, let's say, development there, which is looking at the deflator. The deflator, from our perspective, appears, I know this is a bit technical, but I think we are all technicians, aren't we? So the deflator is a bit, is curiously low. We expected it to be in the order of, say, 8% plus. So 8%, and if you include the real growth of something like 5%, you'd end up having a nominal growth of GDP of something in the order of 13%. Actually, what happened here, it was much lower. It was something in the order of 2.7%. And we have asked KNBS, who are the custodians of these numbers, to actually see if this number is really right. It's quite curious because it's never been this low. Anyway, I don't want to go beyond that, but I just want to mention to you that this has led to a sort of a substantial change in some of the ratios because you are calculating them in terms of GDP. So the current account appears much larger than we were expecting, not because the dollar value or the shilling value has changed, but rather because the projected GDP was much higher than the actual, meaning the projected GDP deflator was much higher than the actual deflator that actually was put out, was circulated. So that's something, and these are data issues, but I think we should all appreciate their data issues. And I guess it confirms that we are interested. We do need to go down to the details, roll up our sleeves and get to that. Okay, so a few points then about the banking sector. The sector still remains resilient, as we have mentioned, and the trends are positive in many ways. There's the issue of numbers that we give you in terms of liquidity. The sector on the whole is quite liquid. The ratios we gave you in the press release, and also in terms of capital. But the interesting thing, from our perspective, is something else that we have done. We've been seeing these NPLs inch up little by little. And the question has been, well, what is actually driving them? And I think we mentioned before some of the sectors that were driving them. And we even told you, for instance, in two particular cases, I think this is like 3 meetings ago, we did talk to you about some specific, let's say, large building projects. I don't remember which month that was, and we have been following it. So this time around, we did a more detailed survey, meaning talked to many of the bankers about one particular issue, which is the issue of delayed payments by government and the private sector. So private sector, you are probably running a particular enterprise, you are delivering supplies, and you are not paid on time, and you have a loan that you intended to repay using the proceeds from that transaction, and therefore you cannot repay. The bank knows that whole scenario. What we found interesting is the extent of it. So actually, about 10%, the precise number is 9.67. So about 10% of banks' NPLs, so these are non-performing loans, about 10% of them relate to these delayed payments by government and the private sector. That is substantial. So you can see it's a bit of a catch-22, right? Or rather, so that is a big issue. Now it's true, when you look at the precise, what the NPLs as a ratio of assets really is, or loans is, it has increased marginally to 12 point something. And actually, if it were not of this 10% of delayed payments, that ratio would have been much lower. It would have been at least 1 percentage point lower than where we reported it. So I'm just making the point that this is substantial. And remember, for a loan to be NPL, to become a non-performing loan, to be classified as non-performing, then there would not be payments to it. It wouldn't be serviced more for at least 90 days. So it's a long time. We are not talking 1 month. We are not talking 1 week. You still have those loans that maybe have not been repaid over the last month or last 2 months. They are still not NPL. Maybe they have been impaired, their quality has been impaired, but they are not yet NPL. So I'm just pointing to this specific issue. Of course, we need to work with the banks and also hopefully work with the others in the equation to ensure that the payments are done on a timely fashion. You know, it is important that those resources circulate. Now, it's also interesting for you to know that if you look at some of the specifics, if you look at real estate, I'm now talking sectors, if you look at real estate, the problem there appears a saturation in some of the buildings, right? Or the building projects. I guess the key one here is malls. There was a time malls were coming up like mushrooms everywhere. And now you look at, say, Limuru Road or Thika Road or Mombasa Road, and you see a sort of saturation. And the occupancy in some of those malls is actually very poor, very low. It's like 25% or a quarter. And that is problematic, particularly because maybe they did not secure the sort of anchor tenant, whether that anchor tenant was a large store, whatever brand store, brand name, or whatever else it is. So that really shows that there is a concern there, which will take maybe 3 to 6 months to resolve in particular ways. And then, of course, you have trade, suppliers to counties, for instance, suppliers to some of people that are building roads and things like that. So I'm just making the point that these are things that are obviously outside the central bank's mandate, but they are at the same time inside our mandate in terms of how to resolve them because of our connection with the banking sector. That's what I wanted to say about this, the banking sector. Now moving on quickly to other things. The financial sector more generally, the markets, I think you've been monitoring how let's say the T-bill market and government securities markets have been going, how they've been, the developments there. And it's interesting that now the 91-day Treasury bill is below it's at 8%. Last time it was this low, or the last time it was at this level was back in October 2015, which then led to the shock of T-bill rates skyrocketing to like 20% and all those other things. So that's a movie we don't want to see again. But I think the pain still is with us to this day. But in any event, the point I'm making here is that actually the government securities markets have been well behaved. As a matter of fact, they tended to be oversubscribed. And for that matter, the yield curves they are well-defined yield curves. I've made this point before, that this is one of our major successes in terms of developing a yield curve that you can depend on and other investors can depend on. I will skip on the market perception survey, although the only point to make there is that there has been a lot of optimism. There is a lot of optimism that remains. There's also some positive numbers in terms of occupancy of hotels and things like that. This morning I went to a hotel to give a speech at a conference, and I asked, it's one of the hotels at the Upper Hill, and I asked the people there, so what's the occupancy rate? And he told me 65%. I said, 65, that's kind of low. I was pushing him. Because actually, you're okay. Yeah? Actually, the break even, well, a rate that you generally shoot at is 60. Well, I don't know. I'm now talking from my Caribbean experience. But in any event, so 65 was pretty good. And obviously, this is not peak season. And said, oh, no, but we'll, so he was very defensive. He said, no, we'll get to 100 very soon. You know, he then told me that, I forget what he told me, the precise date, but we'll be at 100, which I thought was a bit excessive because I don't know a single hotel that really remains at 100 at a sustained level. But in any event, I'm just making the point that there's a bit more optimism and also actual numbers are supporting a sort of a favorable projection, and this is what the market perception survey was showing. By the way, this will be published, the market perception survey. Once it's cleaned up, it will be published, just like we did 2 months ago. I hope that was something that you looked at and you found to be useful for your own articles and things like that. We want that to be a continuous sort of, to continue putting it out there, not only when things are good. We should put it out there when things are good, bad, or ugly. No. Going back to that movie, the good, the bad, and the ugly. A couple of things to, well, just maybe 2 other things here. On fiscal, suffices to say that the MPC noted the government deficit target for this fiscal year that ends next month of 7.2% of GDP. And we also noted that they had already issued expenditure control circulars, which are normally issued in June, but they have already issued them in May. So, and also noted that the expectation of a target in the next fiscal year, which is FY 18-19, target of 5.7% of GDP. This is the deficit target. So all those are good. So the issue is obviously pulling them through, meaning actually realizing these targets. And I think the point here is that, yes, this is one of the reasons why the MPC felt that if this is carried through, there will be some rebalancing of policies, meaning, let's say, there'll be more space, therefore, available for accommodative monetary policy as fiscal policy becomes tighter, meaning less loose. Now, in terms of the deficit, the domestic borrowing target, this has been revised down. It was just revised down a week ago to 268.7 billion. That's the deficit target that now we are shooting for this fiscal year. Now, actually, we have already achieved it, because the May 20th, which was just a week ago, May 28th, sorry, May 28th, just last week, just Monday, I'm sorry, I'm a bit confused. Monday, yesterday, May 28th, the number was 282.1 billion. So you can see we were already a bit higher, 13 billion higher than where we should, than the target. So it means for the next few auctions, on net, we will reduce, meaning on net we will have a reduction by that amount. So over the next 4 weeks, actually, there's a redemption, a redemption of about 100 billion. So 100 billion. And so what we'll be putting out is something like 100 minus 13. So that is what we'll be putting out in terms of gross borrowing going forward. Anyway, but I just want to make a slightly different point on this one, which is, if you recall, some of you back in August were concerned that we may not hit our domestic borrowing target. Well, here it is. We've achieved it. So, and we've achieved it even as we also had a well-behaved yield curve, also as we have had a reduction in TB rates, and even as we have borrowed longer. So in the long term, there was that 15-year bond that we put out recently and a few other bonds like this. So I just want to make the point that actually the government securities market, at least in the primary dealership, in the primary market, has been well behaved and actually strengthened and confirmed strengthening of the entire sector. Now we talk a little about the exchange rate market, but this, because some of you are a bit excited about it, I would say. This has been balanced, as you all know, quite balanced. And the point here is that actually we've also, not only have the inflows and outflows been quite balanced, at least not necessarily every single day, but rather on a week-to-week basis. And this has allowed us to actually maintain our policy of having a flexible exchange rate policy while minimizing volatility. So we've been able to, in a sense, to maintain that policy without that much trouble, or without struggling too much. So the interventions have been minimal in the market. As a matter of fact, the interventions on net have been purchasing so as to stop a sort of a very rapid appreciation of the shilling. I know some of you are made comments about dividends, that this is the dividend season and therefore there will be outflows and things like that. Well, actually you are wrong on that, because you missed it. You missed it. The dividend season has passed. So it's a bit like going to to watch the migration in the Masai Mara, sort of like in September. Well, maybe we should go to Masai Mara in September anyways, but why is that? Because actually the dividends are the bigger dividends, and we are now talking something like 30 million US dollars. All those have happened. There are few small ones in the order of 3 million, 5 million US dollars, which is not that large even on a daily basis. I mean, let's put it this way: when they come into the market to purchase foreign exchange for oil, a shipment of oil is something in the order of 7 to 10 million, that sort of order. So it's not, so 3-5 million US dollars is not substantial in the sense of the market. So, but anyway, that notwithstanding, it's true there'll be a few others coming on. Then the other large one will be coming in November. So we already passed the big ones. The next large one will be in November, which is not can be dealt with. And all this are understood. In any event, it's also interesting that we have benefited from a reduction in risk premium. This is something that when you talk to the investors, you see that actually, and you look at the bond yields in, say, the Eurobond market and places like that, you'll see that actually we are really benefiting from the our premium is coming down, and therefore we are able to attract investments, or rather attract inflows, even as other areas are having, let's say, there is more market, let's say, turmoil, well, maybe not market turmoil, disturbances, as we have seen in other parts of the world because of, let's say, the withdrawal of the unconventional monetary policies from the advanced economies. Okay, so there it is. In summary, the MPC saw scope for accommodative policy, as I said, from the perspective of inflation, it's well anchored. There's also a sense of rebalancing of policies, and also a sense of that the economy, there is a potential output, there's an output gap in the economy. So you can raise the output without really putting any pressure on prices. But the big question was how the last policy action of the MPC, that reduction in the CBR rate by 50 basis points, half a percentage point, how is that transmitting itself? And MPC was unable to unequivocally speak to that, meaning have clarity as to whether this has been that it has acted as according to theory, meaning in order to have that it was truly an accommodative stance and not contractionary, and all for that matter that it may have been perverse, meaning we lowered the rate, but actually what has happened to credit is just the opposite of what we thought would happen. So the MPC could not speak conclusively on that. There are some numbers that were there, but that we looked at, but bottom line is it was better to wait, get some more information, get some more data, instead of rushing in with a sort of a conjecture, sort of belief that it should be lowering is really accommodating, and then realizing later that actually we were going the wrong way all along. It's like when you get lost, the best thing is stop, figure out whether you're going in the right direction or you're going away from home. And once you figure that one out, then turn around and do the right thing. So I think it was the same sense of prudence, particularly knowing how easy it would be to snuff out what I would call green shoots when something is about to begin, and then you snuff it off at the beginning. It's much harder to restart it again. So we'll review this, but the MPC signaled the direction of monetary policy. So again, there is a clear sort of forward guidance as to where the MPC sees policy going, monetary policy going, which is in the direction of accommodative policy. That was very clear, and we will review the developments and the data as these are available in the next 2 months. So that's what I wanted to say about MPC, but maybe now that I have the floor, I could cover a few points, extra points, if you know. Do I get bonus points? No? I think we should give the governor bonus points every now and then. Yeah. Okay. Thank you. So, some things that maybe were on your mind. I still have some time to go. Still have some work to do. So, first on Chase, I'm talking of Chase Bank. That is progressing well, and our expectation, we had told you before that we expect that an announcement will be made shortly. Those are my words, shortly. And I don't know what is shorter than shortly, but whatever it is, you understand that this is something that has actually progressed quite well over the last 3 weeks or 4 weeks since we spoke. So we are really at the tail end, and my expectation is this will be very soon in terms of announcing the flipping of the accounts and all those other things. So that is something that we are watching carefully, and hopefully it will be something that every one of us will celebrate. So yeah, there's no point in running 26.1, no, I should put it different, those are miles, 41 miles, 41 kilometers. You need to run the last kilometer as well, right? So we are now not even at the last kilometer, we're sort of on the last 100 meters, but we need to cross that finish line. On IBL, this is Imperial Bank. Imperial Bank, again, we announced last time that we had already received some bids in terms of, or rather, interested parties, and we have worked with them, and they gave us their proposals, and we went back to them and asked them to, let's say, improve those proposals. And frankly, my expectation had been that we are going to talk to them before the end of this month. But we have a few days off, so let's see. This is something also that I think your patience and also depositors' patience is really appreciated, because it's something that we want to do it right again. It's not something that, and I think there's a notion out there that any delay is a problem, right? That central bank is sitting on its hands and doesn't feel the pain of depositors and things like that. I think our objective is very clear. Our objective has always been three objectives here, but the first one is working to provide the resources to the depositors. That, I think, is working with the depositors in mind. Secondly, is holding accountable those that were liable for or those that were involved in all these misdeeds. That is also an objective for us. But the first one, obviously, is the one that dominates. And of course, there's a third one, which is strengthening the financial sector. So I just want to be very clear that we do understand, let's say, what is it that we need to push. And again, we are working in that direction. Then two other things. I think in your minds, questions abound about the recently unearthed scandal at NYS. NYS means National Youth Service, for those that don't know. But if you didn't know, then you'd probably be in a different planet. So for those of us that have been here, NYS is something that we understand. But I'll say this, a few points on this. It is unfortunate, no, that's not the word. Let's rephrase. It is unconscionable that such losses of public funds would take place at this moment or this day and age. Of course, in addition to the loss of the needed resources, there's also the loss of public trust. So we feel that loss keenly, those two areas, or those losses, the funds and also the loss of public trust. Now there is the question, okay, but Governor, how does the central bank oversee the compliance by banks? Because, you know, and some of you have written this, the banks must have been involved. Well, I'll tell you, we do have that responsibility. It's in our mandate to supervise and to oversee banks and their compliance to the tenets, or should we say the requirements of the various legislation, and the ones obviously that are at stake here or are relevant here relate to the anti-money laundering and combating of financing of terrorism, AML-CFT as we call it, right? And of course the other requirements that are prescribed by the Proceeds of Crime and Anti-Money Laundering Act, or CAMLA for short, other regulations, and including the Banking Act and various other guidelines. We generally do this through on-site and off-site surveillance. And I'm sorry if I take a bit of time and try and clarify a little. One of the ways we do this is through the annual routine on-site inspection of banks. We do this generally annually. And we check what has happened and how they are a bit auditing, as it were. And then, of course, we do target inspections or targeted inspections based on the specific information that we may have from other regulators, in particular FRC, this is the Financial Reporting Center, or other things that may come to our attention in various ways. We will then conduct a targeted inspection on a particular thing and expand out of that. So you think of it as a launching point. So we get that piece of information, and once we go in, we'll look at all the tenants that surround that and branch out from that. Now, we have also provided banks with specific guidance as to how they should do various things. For instance, how they should do the suspicious transactions reports, suspicious transaction reports, STR for short. And banks should flag for STRs things such as large, frequent, unusual transactions that are not related to a customer's normal business, or for that matter, things, reluctance to provide documentation. Anyway, all these large and unusual activities in dormant or inactive accounts, or company accounts who are transacting mainly in cash. I mean, these are all reasons to flag specific transactions. And it's on that basis that actually the banks observe the AML-CFT tenants and other tenants. So I think the point I would make, though, is that all that has been happening. But it's also important, if you ask me, how to, whoops. Just this morning, when I was talking to some people, I told them that there's a Russian phrase, getting lost in a forest of 3 trees. So I feel like I'm lost in a forest of 3 pieces of paper, which is not good. But in any event, the point for me is just simply that over the last 2 years, 3 years, we have actually strengthened some of the requirements under the AML-CFT framework. Some of your readers have indicated that they are very concerned that actually when they go to move, let's say, 1 million shillings in cash, they go through various hoops. And how is it possible that somebody could come through and move, I don't know, 100 million in cash, and save, or whatever other accusations there are today. But I just want to make this point that actually we've improved, strengthened the regulations and prudential guidelines. And it's true, in January, we did issue this circular, January of 2016, issued this circular relating to movement of cash above, say, 1 million Kenya shillings. But also, we have followed it up with other requirements, or should we say other guidelines that maybe you are not aware of, to banks. And one of these requires that, or required in February of 2016, we require that all banks submit declarations on compliance with all applicable AML-CFT laws, regulations, prudential guidelines, and things like that. And we require that the CEO declares under oath that they are actually compliant with those, they understand and are compliant with those things. I'm making the point that there cannot be any excuse that a CEO or the board does not understand the requirements of AML-CFT or the various other regulations and guidelines that are there. And we've issued other additional guidelines. The issue for sure is not guidelines or lack thereof, but I want to put that to rest. The guidelines are there, we enforce them, and we will continue to enforce them. So what happened here? So the issue may be It's not an issue of enforcement or lack of understanding. It is an issue of maybe people not following the guidelines deliberately or deliberately, because how else could you make a mistake on things that you are completely aware of? So now we hypothesize, but I think the point here is that what we are doing is the specific investigations that we are conducting, right? So as you know, these investigations are in high gear. I know there has been press conferences, there's been statements, for instance, by the Director of Public Prosecution. And I just want to let you know that the CBK is working closely with the Director of Criminal Investigations, DCI, and other investigating agencies on this case. So we are really embedded in that investigating sort of environment. And as you know, there are two directions on this case. There are two directions that we are pursuing. And you could say that the first is from the recipient's perspective, and this is the first phase. And the reason for that is, as was explained yesterday, is to recover the resources as quickly as possible. And as you know, some of those have been frozen in particular ways. So enhancing the recoverability. And so that's one direction. So the recipients and those that were involved in the let's say, authorization and all those other things. And then, of course, you have the other dimension, which is banks and other entities that may have been involved in this whole case. And that, as was mentioned, that is the second phase that we will move towards. At the end of the day, all those that are complicit in this or who are involved in this will be held accountable. There's no doubt in our minds. That's where this is going. And we obviously will need to have a thorough investigation, as you can see is happening, to ensure that first, obviously, the recoverability, but also to ensure that the evidence is brought to the fore correctly as to sustain charges and things like that. I would want to say that even as this happens, the investigations, in a sense, are working from two directions, right? So from the beginning, which is where the banks, which is where the authorizations and things like that are done, and also from the end, meaning where the recipients. So I just want to make the point that even as you say there are two phases, even as it's clear there are two phases, the investigation is actually coming from two directions. And for those of you that understand this, this is the pincer move. I don't know if that's understood, but I throw that in. That's all I would want to say about this case, particularly because the investigation is ongoing. I don't want to say anything beyond this. Finally, and I'm sorry if I'm taking too much time, Wallace, I think all of you saw recently a draft financial markets conduct bill. This is the Financial Market Conduct Bill 2018 that was circulated, I believe, on Thursday last week or sometime last week. Now, we also became aware of this bill at the same time as you did. So it was commissioned by the National Treasury. And the bill itself, as you know, reading it, it is intended, among other things, to promote a fair, non-discriminatory marketplace for access to credit and providing uniform practices and things like that. So it's really more market conduct thing. Now, the bill draws heavily from what we call a twin peak model. This is something that we have discussed, I wanted to say ad nauseum, about financial architecture in our jurisdiction. And the twin peak model, in a nutshell, is you have two regulators for a sector. So you'd have this sort of prudential regulator, and then you'd also, so that's the one that sets the various prudential guidelines in terms of capital, in terms of liquidity, in terms of all those things. And then you have another regulator that's doing market conduct. So in terms of, is that institution adhering to or rather is having good practices on in the market and pricing, relation to customers, etc., all those things. Now, generally those two things are merged in one act. This is where we are today. So we do all that. Of course, there are other elements. You have the ombudsman, you have other entities. So it's not necessarily a completely sealed off area that only the CBK can deal with. Of course not. But I guess the point I would make is that that model, meaning when you distinguish them, has been used in some countries. And there are difficulties with it. There are also some positives. It's not necessarily a sort of a slam dunk solution for anything, or for that matter, it's not something that you can dismiss just out of hand. Because, yeah, in some countries, Australia, for instance, it has worked. Now, also, for that matter, you have South Africa that are struggling to get it in place. In some sense, it may even be an issue of the way, and I'm sorry if I bring it down to this level, where you think of, you can drive on the left and you can drive on the right. But it better be all of you in a particular country agree to drive on the left or on the right. You understand what I'm getting at? So there's nothing you can say intrinsically wrong about driving on the left or driving on the right. But you have to understand where you are, where you're starting from, and then work with that. So we actually did make the point when this matter was brought to the table, we were discussing it back in 2016, that really we would want a sort of a more, let's say, incremental approach, rather than sort of suddenly having a dichotomy in this. And that was it until we saw this bill when it was issued for discussion, circulation, and things like that. It's true we did meet with National Treasury sometime in May to discuss the issue relating to interest rate caps and so forth. Our view is very clear on this. This bill does not deal with the interest rate caps issue, and it does not deal with the fundamental issues that led to the interest rate caps. It actually takes a step, in our view, in the wrong direction. Okay? The bill emasculates the central bank. You may call it our actions, and stripping the central bank of powers to enforce the caps, and indeed other things as well. So I'll just go through a few points just to show you where is it that we are with this, right? In the first instance, this act, or rather the Banking Act, which is the one we work on quite a bit, ends up being subordinated to the Financial Markets Conduct Bill. This is something that we have a lot of trouble with, okay? So, secondly, it repeals certain provisions under the Banking Act for approval of fees, charges, and other sort of requirements, or other prudential guidelines, or other items from the Banking Act, which really effectively leaves bank customers at the whims of banks in respect of fees and charges. Thirdly, it repeals provisions in the Banking Act for the CBK to deal with reckless lending by banks. So here you are a regulator and you cannot control reckless lending by banks. Then why are you in power? Why are you working as a regulator? It limits the power of the central bank to issue prudential guidelines to banks. Maybe a lot of you spent a lot of time reading the first part. Please also read the, what do I call them? No, I'll find my way, the schedules. what is deleted, and so forth. So it limits the power of the central bank to issue prudential guidelines to banks. And guess what? It also limits the power of the central bank to place banks under receivership. Obviously, the CBK is concerned at the proposals to limit its mandate and independence, and will obviously be providing detailed comments to the National Treasury on this. In our view, this really doesn't go forward. It goes backwards substantially. Not only does it, our concern has always been proposing something that will be sustainable or will sustainably address the concerns that led to the enactment of the interest rate caps. It's also not consistent with the envisaged regulatory framework or architecture of the region, East African Community. So, in sum, this is the financial sector equivalent of being asked to trade in your well-serviced SUV for a souped-up Subaru. It may have flashy lights, stabilizer at the back, noisy exhaust, and racing stripes, but it is still a Subaru. Ladies and gentlemen, this is not time for hubris. It's time for action. Make no mistake, CBK is under attack. This is a summons to act with courage to defend and strengthen it, reviving our hope in a common vision of a modern central bank at the heart of a vibrant financial system. Well, as I finish, it occurs to me that I've been warned in various ways about certain parties that lie in wait, poised for mischief, but that our actions have consequences. After all, this is Kenya, right? We are ready for that. That menace shall find us at our post and unafraid. Thank you. I'll now take your questions.
So, thank you, everyone.
Thank you. So, timeline for rebalancing. I think the point I would make is the following. The National Treasury has laid out a clear timeline, right? So, first is the outcome for FY 17-18. So by June, they want to achieve the 7.2. That requires, of course, a lot of action on revenues. It also requires cutting or holding expenditures, holding them a little. So I think that one we'll only see it, say, early July, the first 2 weeks. I mean, we'll have a good indication of that. But the one thing we know for sure is we are going to achieve the domestic borrowing target. That we know for sure. Because, well, maybe we'll miss it by a little, but we are in the range. So the issue for us is actually seeing it happen, not the intentions. The intentions are very clear, and the actions are also very clear. So now let's see the outcome of it. Now, for the next budget, the next fiscal year, the target is 5.7. The idea here is that the National Treasury will provide the Parliament with a budget that is consistent with this. And hopefully Parliament will be agreeable to a budget that is in line with this. So that is again for June. That's when we'll see that. But then it will be carried out in the context of next year. Of course, it doesn't mean that we have to wait until the outcome is clear for FY 18-19. No, not at all. But I think the point we are making is that the MPC, when it meets in 2 months, will look at the available data also on fiscal. And on that basis, we'll confirm the space that has been opened because of further action by the fiscal. So that's what I would say on that. Wanderi was talking about the 50 shillings note. It's true we we did hear concerns out there, and I would only say that we have released, I was going to say a whole bunch of notes. That is very untechnical, right? The governor talking of whole bunch of notes. But we've released a lot of notes precisely to deal with this, and those notes will kind of filter through the system. As you can imagine, when we release them, they are released through the banks, and then the banks sort of push them down to the, as they are requested or as they are demanded, to the commercial banks, to the branches, and then from the branches to the consumers, or rather to the, let's say, retailers or whoever else, consumers through ATMs and things like that. So we hope that that is a problem that is being addressed, and we hope that you'll see some relief in that area. So it is important. There are two policies. There's a policy that we are pushing, which is a clean notes policy. It's important for all of us to have clean notes. So the idea of having very soiled notes is not consistent with our policy. So I just want to be sure that, to clarify that the objective is very clear. It doesn't mean that every note should be brand new, but it has to be that they are clean, and when they reach a certain level of usage, we need to withdraw them from the system. David Helbring, right? He was talking about perverse outcomes. I guess we've discussed this before. The perverse outcome is as follows, or rather, what is the issue outcome? When we say we want to have an accommodative monetary policy, what that means is you generally lower interest rates. You lower interest rates, that generally is supposed to lead to increase in credit in the system, and that would lead to pushing up GDP and hence the accommodation. That's the regular transmission. However, given the caps, we are unsure that that is what will happen. You may end up lowering rates like we did 2 months ago, but that does not lead to an increase. Rather, it leads to a decrease in credit, which would really be counter to your normal, hence the word perverse. That is really the issue. So the MPC wants to be sure that we are not, even as it intends to lower rates, it will only lower rates because that is accommodative. It's not lowering rates just to have a headline that they have lowered rates. The issue is what is happening in the economy. What effect do they want to produce in the economy? And this is why they want to be sure that indeed that has a movement in rates downwards would have led to an accommodative stance, meaning additional credit and so forth. Under CBK under attack, I don't know. You know it as much as I do. Your guess is as good as mine. You're the one who writes the newspapers, not me, remember? So I write other things, not newspapers. Digital lending, I don't know who asked this, but who asked the digital? Okay, Sophie, yes. Well, let me be clear how we see this. Actually, there is a lot of increase we have seen an increase, a mushrooming of, let's say, entities that claim to be providing loans to people, right? They come in all sorts of guises. In the olden days, it was the guy at the market, right, who is just sitting there. And you go to him, and he's generally a him, and he'll give you, I don't know, whatever it is, the loan sharks, as we call them. You never call them loan sharks until payday. So on payday, that's when you call them their loan sharks, because that's when they really come to shark you, right? Okay, so, however, you do have these new lenders using regular IT platforms. So they are clean, they are slick, they are like that Subaru that I was talking about, right? And they have all this noise and all that, but underneath it, they are still a Subaru. So the point here is that the digital lenders, it could be that they are the modern age sort of equivalent of the loan sharkers. And that's the issue. So we go to them because we are desperate. I have an SME, or I have a certain need, whatever it is, my school fees or whatever else it is. I have this absolute need, and I go to them. Now it's clean because it's online and all those other things, and or they're in a particular nice place and they have jazzy sort of things, decor and all that, or modern people, whatever that means. But at the bottom of it all, they could very well be doing what the old age loan sharks used to do, sitting under the mango tree in the market. That's the issue. So we need some sort of clarity here. We need to make sure that we are protecting our consumers, and we are not having a sort of, let's say, mushrooming of these bad actions. Now it's true, some of them talk about crowd surfing and, or not surfing, crowdfunding and all those other nice sounding. We have no problem with that. All we are saying is there are risks, and we have to deal with those risky people. We have to distinguish the good guys from the bad guys, or we have to distinguish the good, the bad, and the ugly. I mean, we have to deal with that, because at the end of the day, it's not the flashiness that will remain. It is that somebody borrowed such and such and is under a lot of strain because they are paying at a very high level of interest. So I remember, in any event, you're much more familiar with it than I am in some of these things. So that is really the issue. Is there space going forward for some of this? Yes, there is some space, but it has to be correctly dealt with. It has to be rationalized and dealt with correctly. Unfortunately, and I was speaking this morning about it, there is a bad mentality, sorry to call it that, of being in the Wild West, right? Anything goes. If you just liberate something like I have, or I know what it is, I something, or E this, or M that, then it is, it's flashy. It's again like my Subaru, right? So no, I think we shouldn't. We need to be sure that all this is taken care of, is regulated correctly, and there is no regulatory arbitrage. You do not want there to be some sort of regulatory arbitrage between these new age lenders and also the versus, let's say, the old age lenders who they claim they are disrupting. No, you don't want that. On corruption, tough question, very tough question. My only point here, I don't want to deal with your question directly. My only point here is that it's something that we need to deal with as a society. This is not one person or one sector issue, and we have to deal with it as a society. It is when you say no, you say no, I say no to that offer or whatever it is. One of the interesting things is, we just, sorry now I'm critiquing your articles, right? We think that, or we put it as if it's only the public sector that is corrupt. And the president actually made a comment that resonated with me, I think a few years ago in November of 2015, that he doesn't know a single case where a government official is bribing another government official. It doesn't happen, right? You always have a private sector element to it. So you have somebody who is being bribed by somebody in the, for that contract or that whatever, tender or whatever else it is. But I think the point I'm making here is that there's a quick fix approach, right? The lipstick kind of thing, or that, obviously looks okay at the moment, but you know what happens. After a little while, it falls off, and you're back again where you began. So I think we as a society need to continue in a sort of fundamental changes in some of these things. Now, we know that also because we've been fighting these banks, as you know. Think of the banks that we put in receivership. You're asking David who is attacking us. You've written those articles. You know all those articles of the ones that have been attacking us. You know who are behind those articles, not us. So I just want to make the point that all of us are involved in this, but you have to take your position. After all, you are supposed to be the fourth column or fourth estate, and indeed your tenants as journalists or people in the media really goes directly in this direction. So I think I've gone a bit beyond what I wanted to say, but I hope I've given you some material.
All right.
Other questions?
1, 2, I'm just going to count them. 1, 2.
Okay, a lot of you have asked questions that really at this point I cannot say too much about, but let's begin. Marianne's questions about ATMs that is spewing bitcoins. First, I'm not aware of it, but now that you've brought me to this, let's see what we can do. You know our views about bitcoins. But on the other hand, remember, it's not for us to regulate every single thing in the financial sector. There are other regulators as well. So this is something that we as regulators need to figure out. But it is not, I have to insist, it's not currency. There's no protection on it. And it's a bit like you go to Italy and somebody's paying you in dollars, right? You understand what I'm getting at. So there's a bit of, if you get fake dollars, that's your problem. There's no framework around it. And it's very dangerous. It's very dangerous, extremely dangerous. I've made the point that, and I made it this morning as well. Our problem with current cryptocurrencies, more generally, it's not just Bitcoin, other things, is how close they are. They are the best indicator to illicit transactions. Illicit transactions. And if you want to be kidnapped, just tell the world that you're holding Bitcoins. So I leave that. It's very dangerous. So we need to deal with it. Blockchain. Absolutely. Blockchain is a technology that we think holds a lot of promise. Holds a lot of promise. But it needs to be brought out in a sort of a use case. So it's not just getting excited about blockchain, right? I was telling the people this morning at a conference about these issues that years ago, we spent a lot of time discussing whether I should buy a PC or Apple Mac. Now, some of you don't probably, were not involved then, if you understand what I'm saying, right? Only the dinosaurs among us were involved in that discussion. The point is that you're talking technology. PC, I could tell you what the processor is. I could tell you whether it is 32-bit. I could tell you how many this, the other, is it RISC, is it? I could spend an hour telling you about my computer. But I don't buy the computer to actually discuss computing. I buy the computer to actually write, to run regressions, to do Excel, go to the internet. That is the use case. And so let's focus on the use case. It's true we have, here in the central bank, we've had some proposals from some banks that use these particular things. And I think it holds a lot of promise. But at this point, I cannot tell you what sort of use cases are. Why? Because if I told you, the other banks would go and rush and do the same, right? So I don't want that. I mean, give them the. I can't tell you the number of banks, but I can tell you there are 4 use cases that we are looking at. I can't tell you the name of the banks, but there are 4 use cases, and I think they hold a lot of promise. But I'm not a techie. You are the techies. Now, there are other things out there, of course. This is just the beginning. Frankly, we feel that there's a lot of potential, not just for blockchain, but more generally innovation. Let's not get so stuck with blockchain. I know everybody says blockchain, AI, and things like that. AI is artificial intelligence or whatever it is, right? No, I think there's plenty. As a matter of fact, we want to go to do RegTech. There's another thing for you, jargon, right? Throwing jargon at you. The people at the front know what RegTech is. They want to regulate using technology, right? And figuring out the information about near-time information, almost real-time information about a bank, and use that to regulate how the bank is proceeding. So there's a lot of potential, And I think the limit is not even the technology. The limit is actually our own ingenuity, our own smarts. And I think we have a lot of that in this room and in Kenya and beyond. So watch this space. Then Alex and others were asking about NYS, how many banks, things like that. So I'm going to take all these NYS questions at once, including the one about missing link. I'll come later. Mumbi's question about our staff and things like that. And Brenda's question about the contents of phase 1 and things like that. I think you should all be aware that the investigations that are taking place, I mean, it is important that we give the investigators space. Let's not anticipate. I think it would be terrible to kind of spring the suspects, right? Just like that, anticipating. If indeed you think that X is the person who is involved in this, well, let the data point to the person. And I think that was one of the major weaknesses in the past, right? We all want to have people paraded in front of us. So that drama of parading people and again and again and again, where does that lead us? So Brian, of what use is it? If you get pictures of people, in the jargon it's called what, the pep walk. Isn't that what it's called? The pep walk, perpetrators walk. Get pictures of that, then what? What does Wanjiku get from that? Her money has been taken. What do the nurses get from that? What do you get from that? Except a nice article. So I think the point is that let the investigators do the job. They are the professionals. Let them do a professional job. Let's not anticipate them. Indeed, if you want to help them, please, you know them, go to them, provide information. But I think it is important for the investigators to be given enough space. In the same way, you'd be very angry if the investigators got, quote unquote, political interference, right? You'd be up in arms that somebody, a political person or whoever, is not giving them space, right? Wouldn't you? You would. So hold that to yourself as well. Hold the mirror. So don't overreach in that sense. Let them that space. Of course, at the right time, they'll give you more information. And I know we've said that in particular times, but I think this is why I go back to your patience. It's important to be patient. But at the same time, it's also important to see that actually there is traction in some of these things, in particular ways. So I can't tell you how many banks, how many people, all these things. Those are things that will be dealt with at the right time. Of course, I can make the point also that we are still in the phase 1. As I said at the beginning, and this wasn't me, it was also the DPP talked about phase 1, and phase 2 will widen it. Again, there is reason to that. There is reason to that, and I try to explain the rationale behind it. And I hope, in a sense, even though you may not accept, you may want to be a bit impatient, you can at least accept the rationale that is behind this thinking. At the right time, everything in due time, this will be revealed in particular ways. Brian was asking about the missing link. I don't know if there's a missing link. Like everything else, I think regulation at times appears to be one step behind. And this is not just in this area of AML, CFT, it is in most places, right? But I think the point here is that, yes, if there are things that need to be fixed, they can be fixed. But at this point, we are not talking policy. policy correction, No, 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 no. I told you the priorities. The priorities is first to recover the resources that have been lost. And secondly, to deal with those that have, that were involved in it. Those are the priorities. Then we'll deal with tightening. If we see there are ways of tightening policy in particular ways, of course we'll deal with that. And all the improvements that we mentioned, and I thank you for acknowledging that we've done some work in this area. I forget who acknowledged this. Maybe it was you, Brian. I don't remember who it was. I think the point for us is, yeah, sure, we'll do some more. We are not done yet. We are not done. There was a question about, by Patrick and others, about the involvement of the central bank and was it complicit and things like that. All those are things that will be dealt with in due time when we go to that phase. And of course, we know how things operate. I'm not going to now appear defensive and tell you X, Y, or Z. But I guess the point I'm making is any one of us, if you are stopped by the police somewhere, now maybe that's a bad example. Maybe I should use a different example. I guess the point is, yeah, what we've done, we should defend it. Meaning, if indeed this is what we've done, then yeah, you can show it to somebody and they'll see that it makes sense. It's like when you're in school, you show you're working to the teacher, and the teacher gives you a tick or whatever else it is in particular ways. But I think the presumption that, which is what you're saying in social media, remember again our problem with social media. I hope this is your problem. And it isn't just in social media. There's a lot of fake news. It's actually part of the new age, right? Everywhere, fake news. And as we have said before, it's better to be right than to be fast. And this is a principle that all of you, and in particular Financial Times, I don't see them here, but that's okay. They're very aware of that, right? So I guess my point here is very simple, that let things develop naturally. I've told you that there's a sort of a plan. We embedded in the plan. And when it comes to looking at specific people, if it points to people in whatever, in the press, it points to people in CBK, it points to people in other countries, it points to people in other offices, there are no holds barred. I hope I have explained your question well. Brenda also, I mentioned, I think I covered your question about phase 1, phase 2. Meaning I cannot tell you beyond what has been put out now that there is it's been taken care of in 2 phases. And the first phase is to get to those that were involved in the, let's say, the processing or the procurement side, and actually who are paid or who are involved in the payments, the final payments. So that's phase 1, because that's where the money is, you understand? And then the phase 2 is sort of all the ancillary, all the people around that, including other institutions, that banks or whatever that may have been involved in this. So it's a much more, instead of going after everything, you understand what I'm saying? Just tossing everything up and seeing what stays up. No, it is much more organized. And I think if it is meticulous, it will lead to the results that you would want to see. So just thought that would answer that. There's one last point, or actually 2. I'm sorry, I'm missing things. They keep popping in my notes. Alex was asking about 25% more, 25%, where is that from? Well, the point is that this is information that was presented to us by the teams that do the background work. Today now I cannot tell you where that number came from, meaning which survey, and I cannot. But it is one of the set of numbers that were presented to us. And frankly, as I have told you, we get a lot of data. I've told you before that the weekend before the MPC meeting, I get a file, this file, and in it there is a data matrix which is what is it? 256, right? Or 55? 250. So you see that's 2 to the power 8. So 256 or 250 data lines of data. So I cannot tell you today what it is, but it's in the mix. It's in part of the soup that we thought. In the future, we'll give you more information that we find useful. And I think we've begun that journey by now giving you the market perception survey, which I hope you'll also find useful for your work and things like that. Finally, the question about the new currency. Abdallah was asking that question. I don't know where Abdallah is. Oh, there you are. Yeah. So you've had nothing. That's not because nothing is happening. It's not because nothing is happening. If you remember, there was a problem. We went to the courts, and this is because the procurement board, it has a long name, Procurement and Administration Board, decided that we should cancel the contract and award it to somebody else, and we actually appealed, as we should, to the High Court, and we won that appeal. You know that, and the judge was very clear. But there's one, he put together 2 specific cases, and there was another case that was also amalgamated, so there were 2. And in the second case, he did not favor us with the judgment, and we appealed that. So the date will be July 4th, I believe. Now that sounds odd. That sounds like the wrong day. But whatever day it is, it's early July, maybe 3rd, maybe 4th. That's when we'll be having the hearing. So that is not, I mean, it's the courts. I would want to have had it like by yesterday. So if there's somebody who is anxious, if there's any institution that's really anxious to win this case, it's a central bank, for many reasons. One of which is that we want to be vindicated in what we did. We want everybody to see that we did things according to the law, not just the letter, but the spirit of the law. And that contract was completely above board in process, in every single item. And will be vindicated, but that's not the only reason. The other reason is that, yes, we need to execute on it. We need to get the new generation currency. So I think it is extremely important for all of us, for the nation, that we move in this. I think I've covered all your questions, so thank you very much, and I appreciated talking to you.